Hello there. Now, technology is an important part of the Asian market, and today I'd like to discuss the Chinese internet sector and Asian consumer electronics and semiconductor industry. Now, the Chinese internet platforms have taken a hit in the past 18 months on the back of regulatory reforms. These companies are making adjustments to their business models and cost base and should look to return to better earnings prospects by 2023. In contrast, the consumer electronics and semiconductor manufacturers have shown great resilience during the COVID-19 pandemic. However, with the prospects of weaker corporate spending in the developed economies and the consumers switching to services from consumer goods, the outlook could be more challenging for hardware. Now, the Chinese technology sector regulation reform has focused on a number of themes, including tackling monopolistic behavior and squeezing out the competition, adequate pay and social security coverage for delivery riders, limiting minors' time spent on video games, and customer data protection. Now, since the second quarter of 2022, the Chinese government's tone on the sector shifted and focused on promoting its healthy development. This was regarded as supporting the need for the internet and platform economy to continue developing. Companies have also adjusted their business model to comply with regulations and cut costs in order to improve profitability. Now, semiconductor and consumer electronics could face some cyclical headwinds. Contrasting against the Chinese internet companies, consumer electronics and semiconductor sector have been boosted by strong global consumer demand during the pandemic. But now, the prospects of weaker economic growth are undermining corporate demand. The July purchasing manager indices from both South Korea and Taiwan have shown a sharp drop in manufacturing activities, including new orders. This softer demand and more conservative inventory controls could continue in the months ahead. Taiwan could be in a slightly stronger position given its top semiconductor producers are foundries and therefore in a better position to see customers for a broader range of business. What does this mean for investors? Taiwan and South Korea have underperformed year to date relative to more domestically driven markets such as Southeast Asia and India. Both markets' valuations are already trading at the bottom of a multi-year range. Hence, we believe a large part of the challenging outlook for consumer electronics and semiconductor should already be reflected. A catalyst could come once the US and European economic cycle improves once again. Now, for the Chinese internet platforms, the regulatory environment should start to stabilize and allow for a more predictable environment for companies to plan for the future. A cyclical rebound in the Chinese economy should also help to improve the revenue outlook. Despite some short-term headwinds in both cases, these challenges are already largely factored in, and we believe that the long-term structural factors for these areas remains constructive.